Have you ever wondered who manages the money in your wallet and the interest rates on your loans? Let's look at the Federal Reserve. Often called the Fed, this is the central bank of the United States. It acts as the backbone of the entire financial system. The system is divided into 12 regional banks, ensuring that economic perspectives from all corners of the country are represented. The Fed has a dual mandate, which means it works to keep prices stable while also trying to maximize employment. While Congress controls taxes and spending, the Fed remains independent to make long-term decisions without short-term political pressure. By adjusting the federal funds rate, the Fed influences how much it costs for banks to borrow money, which affects your personal loans. Think of the Fed as the economy's shock absorber, constantly adjusting policies to keep the financial system running smoothly. Learning how the Federal Reserve works helps you understand the bigger economic picture. Thanks for watching, and stay curious.